Hey there, Leigh here from Martinuzzi Property Group, MPG, with this week's real estate market update. I hope you're having a fantastic week. Thank you so much for tuning in. In last week's RBA meeting, they decided to keep that cash rate on hold at 4.35%, which wasn't surprising. Inflationary pressures are easing slightly. However, it remains a concern. Underlying inflation is still sitting around 3.8%. And it means that the RBA will likely stay cautious in the upcoming meetings around any future rate cuts. However, some banks are predicting early rate cuts as early as November this year, while others are suggesting maybe mid-2025 when we will see that next rate cut. Now, if you missed my podcast with Colin from Mason Financing, definitely worth a listen or a watch. You can check it out on YouTube. I'll stick the link in the description notes below. But we talk about interest rates and what the banks are doing there already, reducing their variable interest rates right now as well. So interesting one to listen to. On the affordability front, Martinuzzi's article showed that over half of Australians rank affordability as a top factor for livability, especially in younger people and renters. He had a number of insights in this article, which I found quite interesting. He suggests that many are actually dissatisfied, particularly in Queensland, where access to affordable housing remains a challenge. He also showed that many people are dissatisfied with their location because they've been pushed out of their ideal locations in chase of affordability. So that's a key factor for livability in the Australian marketplace at the moment. And I think it's only going to worsen until there's some sort of upheaval about property prices in Australia, because it's becoming more and more unaffordable for many people that haven't been in the property market for too long or haven't entered the property market yet. On another note, the recent survey by the Australian Bureau of Statistics showed that unit prices in Melbourne and Sydney are still worse or lower than they were back in 2012. Now, that means affordability has improved, but some sellers are selling for a big loss. And the main reason for that, which is what they highlighted, is that buyers are cautious that the quality of the units aren't as great over the last decade and that there's been an influx of supply, and that's why those unit prices are certainly lower. Anyway, that's my update for this week. I hope you've enjoyed it. If you are selling, buying, anything we could help you with in the property space, we would love to assist. Please reach out at MPG. We're here to help you live more fully, have more meaning, and find more joy on your next property journey. Talk soon.